Okay, here's our update on the dollar index. We're going to start on the monthly chart. It is September 5th. We do have a few days of trading in September so far. We do have a full weekly candle, the last weekly candle of August, which was kind of split between August and September. Dixie is trading, even though it's Labor Day on today in the U.S. We also have metals trading. The futures for the different indices are trading as well. So we have signal. This is our monthly chart. Been calling this out on Twitter constantly. What we're watching for is the 3-year cycle for the dollar. We know that this 3-year cycle started January 2021. This is September. We're making fresh new highs. I'll zoom in. You can see, we had this really bearish candle in July that looked like it might be our top. Looked like it was in real time. Then we just had this like massive move last month in August, and now we're getting follow through in September so far. We could always fail. It could be that that this is the month that's going to be the high, the month 20, and we're going to get some kind of violent reversal. We'll have to see. But as of right now, we are making new highs. And the dollar index, we know, is inversely correlated with a lot of assets. As it goes higher, risk assets go lower. So this is really exciting. If you've had the patience, you've respected risk enough that you're watching this. You now have watched this climb for 20 months. If this is a 3-year cycle, that is 36 months. That means this is already right translated. There's no way, well, yeah, I guess it could turn out to be left translated if it ends up being longer than 36 months for sure. But this has already rallied for 20 months. Now, it could certainly rally for another 4, 5, even 6, maybe even 10 months. But at some point, there's going to be a top, and we're going to have that multi-month decline into the 3-year cycle low, right? Like, it doesn't have to be a massive decline. Like, this was your decline for one of them. This was another decline. That was another decline. This was a massive decline. Again, doesn't mean we're going to get one of those. But at some point, we're going to have a multi-month downtrend. Not something like this, where we just had 1 month of consolidation, but something more like this, right? Something more like this again. And that's going to be a multi-month trade, either direct, puts on UUP. There will be multiple ways to trade it. And obviously, as other charts shape up, we'll play them in their own right. You can also see we're like pretty massively stretched above the 10-period moving average here. Let's just do a quick, yowzer, right? So like we're almost 7% above, which is really high, like above the 10-month moving average in this case. And this is a currency. I mean, you can see that generally doesn't last long. Like you have this period where we just kind of like we're way above it, and then we had this multi-month period of chop. So at some point, we're gonna pull back to that mean, right? Either a violent move lower or some consolidation so that it kind of catches up. And we would expect that low, that 3-year cycle low around January 2024. It's not going to be perfect. It never is. I mean, sometimes it is exactly 36 months. Like this was pretty much exactly 36 months, but it's just a ballpark, a frame of reference. But you can see this thing seems to be racing towards that 120 level. Like, let's see, like it looks like it wants to make a double top at worst, right? Like at the least bullish, right? Like get up here, make a double top, and then start to decline into the 3-year cycle low, which, I mean, that's still another 10% from here, which is a lot of upside for a currency, but still way below this high up here at 160. So you could still make that move, even make a slight higher high above here, and you could still be bearish on a longer, much, much longer term time frame. And that's what I think people are kind of missing. There's a lot of bias in this where it's like, well, it's the dollar. They're printing so many of them. There's no way it could go up. And it's like, well, relax. Just look at the chart. Just look at the chart. You'll see people doing all kinds of mental gymnastics, looking at the dollar, adjusted for inflation, all this. It's just, well, why not just trade the chart for what it is, right? So that's the monthly chart. Now we can get a little bit tactical and get a sense of like, well, what does the weekly and daily cycle look like? So the weekly cycle is actually kind of, I mean, it's definitely not early. We're in month 14. Again, we're making fresh highs. The last weekly cycle topped out on month 17, or excuse me, week 17, week 17. But it was a really short decline, right? Just a few weeks, had our low on on week 20, and then up and at 'em. So we could have another shallow ICL, but the point here is we're not early in the weekly cycle, and so this is definitely not the point where you would expect that, any upside move is going to have a ton of follow through. Now that said, we're going to want to zero in on the daily cycle, because if we're on week 14, then that suggests to me we maybe have two more daily cycles. Like we basically finish out this daily cycle and then maybe have one more daily cycle after that, which is the one that takes us into our ICL. So let's think about that. So our current daily cycle today is day 18. And you can see these things can kind of be all over the place in that 20, sometimes even 40 day range. So last one was 31. The one before that was 30. Let's just say we get something that's 30-ish days, right? So, and these lines here that I've drawn are very specific. So this first line is actually the next inflation number, the CPI print. You can imagine these things are going to be important catalysts, sort of turning points for the whole market, not just the dollar. But let's see, so if we count from that point, I'm trying to get a sense for how many days that gives us. So that would be a 24-day cycle. This next date here, the 21st, is the Fed meeting. That would be a 30-day cycle, right? And so that gives you a bit of a kind of ballpark, right? That like you could see a world, this next number here, the October 13th, is the next CPI number. And this one here is the next Fed meeting. And that next line here is the next CPI number after that. And the CPI numbers, generally, they just come in around, the 10th to the 13th of the month. And so you have to imagine that these are going to be important turning points for the market, these CPI prints, plus the Fed meetings where they announce their interest rate policy and also kind of give a sense for, what might come next. And so I would expect we're going to get so again, this is day 18, which means we are getting in the timing band to have a daily cycle low, or excuse me, a daily cycle high, and begin the descent into a daily cycle low, which means we want to watch to see if this daily cycle high is actually also going to be our weekly cycle high. That's going to be important. And so given the importance of these next dates, I would expect that we're going to get our daily cycle low probably right around when we get that Fed meeting. So, late September. That would give us a daily cycle of about 30 days. The other alternative is that our turning point becomes the CPI print. You have to imagine, and maybe it's not the exact day, but right around there, a big catalyst like that tends to cause some pretty powerful price action that helps to kind of resolve some kind of consolidation. So we'll have to watch what the price action looks like going into the meeting. And then from there, if we imagine that we get a low from that meeting, you could see a world where we get another daily cycle for another 30 days, right? That takes us into that November meeting, right? And then from there, we have another daily cycle from that meeting that kind of takes us maybe to the December Fed meeting, maybe the December inflation number, which would be around the 10th or 12th, right? Somewhere around there, right? Now, there's no crystal ball in any of this, right? This is more of like preparing. We know something significant is going to happen around these dates because, again, the market is looking to these dates for these data points. It's looking for this information. It's really just a question of what's the price action going to look like going into this? Are we rising into the move? So maybe we're going to peak. Are we descending into the move? So maybe that's going to be a turning point. some kind of excuse for the market to rally even for a short period. So that's what we're really going to be watching here. I'll be giving real time updates on Twitter, but really exciting here, I think, is the bottom line. The dollar. I mean, we've watched the dollar rally for 20 months, almost an entire 2 years, right? In almost near vertical fashion. And I'll actually go back to that monthly chart. I mean, when you just kind of take a step back, it's a little bit sobering, right? Like, what was the rally? Or, like, I should say, what is the percent gain, right? So, from January 2021 to right now, the dollar has appreciated roughly 23%. So in that 20-month rally, we've gone up 23%. I mean, that's incredible because that's a currency, right? Like, and of course, we're losing dollars to inflation, obviously, but where else would you have put your dollars? If you put it anywhere else, in gold, in the stock market, that's not looking great. I mean, let's look at gold for that same period, actually. So, and just, I mean, just literally, okay, let's look at from January 2020. When is that? Yeah, let's just put it right here. Let's just give it. Let's just give it the low of. Let's give it the low of that, January period, to where we are now. Okay, so we're still up. That's good. I mean, we're up about 11, 13% where we are right now. At our peak, we went up 37%. So quite a bit more than that 23%. 37% is a lot more percentage-wise than 23. But, I mean, look at that near vertical move for the dollar. Again, imagine that chart, right? The dollar rally started here and just went straight here. Here you had this nice little rally here, and then you just kind of petered out. And you've had this just ugly consolidation. At some point, this is going to blast off, and we'll have to wait for it. But the Dixie, I suspect when we get that IC8, or excuse me, when we get the 3-year cycle high for the Dixie, that might be your, when the match goes off for this powder keg to kind of ignite. So that's what we're going to be watching for, among other assets.